Welcome to the Vetiver Vibes podcast. We're your hosts, Nikki Fraser and Rachel Dean, certified clinical aromatherapists. We are excited to have you here on today's episode where you know that you'll get the best essential oil scoop.
This episode is brought to you by Essentria, a leading online school for aromatherapy. If you want to learn more about how to become a clinical aromatherapist, check out the courses at www.schoolofessentria.com. Hi, Nikki Fraser here with Vetiver Vibes. This week, I'm excited to have Krista Burch on with us. Krista is a tax principal at Bateman MacKay with 10 years experience in corporate structures, mergers and acquisitions, and tax compliance. She obtained her CPA in 2014 after graduating with an honors in accounting from Brock University. Krista is currently in pursuit of her tax and estate planner's designation to begin to provide more comprehensive estate planning services. She also loves to travel and play recreational sports. Welcome to the podcast.
Thank you for having me.
Yeah. And so this week we are talking taxes. I know it's a fun subject.
Yeah.
We were just chatting about that before starting to record, and it isn't always fun, but it is something that every small business person needs to know. Every person needs to do taxes, but when you own a small business, it's even that much more important. So we'll kind of geek out on some of this and try and make it as painless as possible. As I was saying, math, taxes, and I don't get along. That's why Rachel does everything, the book and section of everything for the business, which I am very grateful for. But it is all important. So before we dive in, we always like to ask all of our guests, what is your favorite essential oil if you use them, or your favorite scent?
Peppermint.
Oh,
That's my favorite.
Nice and invigorating. I like it.
Yeah, that's what I need when I deal with taxes.
There you go. So I'd love to know, what are some of the biggest mistakes that people often make before they get an accountant? Are there certain things you see?
Before they obtain an accountant. So I would say the biggest mistakes that I see, not so much on the sole proprietor side, but maybe more on the incorporation side. I think that people think that they need to incorporate right away. Like if they're going to have a business, they need to incorporate. And sometimes that is true, but I would say most of the time it's not. So typically you would like to incorporate when you have significant legal exposure. But if you're not doing anything that's, super wild, where you're not gonna, have a lawsuit kind of hanging over your head, and you can have a good business insurance to mitigate that, you really don't want to kind of consider incorporating until there's a tax reason to do it. And for the most part, if you can deduct it as a sole proprietor, you can also deduct it in the corporation. There's not really any other benefits when it comes to expenses and income. It's just that there's a deferral opportunity in a corporation. So as a rule of thumb, you want to be making more money than you're spending after tax, right? In order to utilize that corporation properly so that you can get the deferral. But if you're taking everything out of the corporation at the end of the day in a wage, then it's just going to kind of cost you money in compliance and not be super beneficial.
Okay, good to know. Because that was actually one of the questions that Rachel was wondering of, when is it appropriate to incorporate? So you just answered that right off the bat. That's awesome. What I know, it's always important throughout the year to keep records. Are there any things that you can think of that would be beneficial for small businesses or anyone to do to help themselves come tax time?
Yeah. So what I would say, what I typically recommend is, if you can, even if it, and now obviously it depends on the type of business you have, but if you are able to even get one credit card that you only use for business. So this is more if you're a sole proprietor. So if you're not incorporated, having that one credit card that you only use for business expenses will really help, because then at the end of the year, when you get 12 statements, everything is for business. Right. So it's important to keep your receipts, but having a credit card or even a separate bank account that all your revenue goes into and all of your expenses come out of, can just help organize you. You don't have to do it that way. If you prefer to just, keep all your receipts and track it that way, that's also totally fine. But I do find that either having a separate credit card or a separate bank account, it just helps, because then at the end of the month, you're not racking your brain when you're, going through, say, your monthly expenses.
Yeah, no, I agree with that. I've always had a separate one. I don't always 100%. There's always a few things that end up on my personal one, that I'm
Yeah.
like, because it's
Yeah.
like to girl math of I want to order this, but I need to spend a little bit more for free shipping. Oh, but I need this for work, so I'm going to add it on. And then
Right.
it's on my personal credit card. So I'm like, all right, bring the receipt over, only this section, and
Yeah, yeah, but
and
those are the
doing that.
exceptions, right? Those are the
Yes,
exceptions which you can pull, and
absolutely.
it's a lot easier to find the exceptions than to just have everything commingled, and you're like, oh geez, what did I
Yes.
do?
Yes. And you made a very important point there of when you do your monthly statements or when you're looking at your monthly accounting aspects of, and I am very guilty for this, and I stress to people all the time, don't be like me and wait until the end of the year, where it's February and now you're looking from January through December's receipts and putting them all together in my to bring them all together for my own personal small business. This isn't because it's always on the back burner. So it is a true small business. And yeah, I'm horrible at keeping up to date with my own monthly receipts.
Yeah, you
So
won't
that
be
is
the first.
always,
You're not the first. You won't be the last. That's for sure.
and
Um,
every year I'm like, I'm going to get better. And when I do it, I actually do usually like the January and February and March of the year that I'm actually in doing it. And then I'm like, okay, at the end of every month, I've already started. I'm done these first few months. Yeah, I don't continue.
and then the
And even
weather
right
gets
now.
warm.
Oh, yeah.
Yeah.
Even I think about it every first. I'm like, I'm gonna do it. I have not done mine this year since March. So, yep, it's so I do that is one thing I do always recommend also is if you get in the habit, because every now and then though I will put things in that I find are harder to track. Sometimes my kilometers, like the odd little
Mhm.
things, I'll pull up my document and I always put those in. But I need to get better at actually grabbing all my receipts and putting because they're all in a nice envelope. I have them very organized at least this year. So I figure it's one step forward. I actually have them organized. They're all in a nice safe space, so that I can easily find them versus past years, which even at that I'm scrambling to find them. Which brings me to a question of when should someone get a bookkeeper? Because and what's the difference between a bookkeeper and an accountant?
Ooh, great question. I like that
Yeah.
question. So let's start with the difference. So the difference between a bookkeeper and accountant. So my role as an accountant, I want to differentiate that I'm in public accounting, which means businesses typically come to me to do their financial statements, their corporate tax returns, and kind of give like ad hoc advice throughout the year, right? There are lots of businesses that have internal accountants that say, call people for accounts receivable, or,
Mhm.
cut the checks for AP, right? Um, that's more of like that's an internal accountant. So that's not what I do. So a
Mhm.
bookkeeper could potentially help you with something like that. Now, it can be, it depends how robust you want the role to be, and how small your business is versus, how busy you are, working the business versus working
Mhm.
on the business, you know what I mean?
Yeah.
But a bookkeeper is going to pick up your day-to-day transactions. So lots of people like to have bookkeepers that, you just give them the receipts and they pick it up. So you don't have to worry about tracking any of the receipts. It's just as you
Mhm.
just need to make sure that receipt gets to the bookkeeper, right? So some people have bookkeepers if they're sole proprietors. It's they're fewer and far between, typically because when you're a sole proprietor, you only have to worry about income in and expenses out.
Mhm.
When you're incorporated, I highly suggest a bookkeeper, because then it becomes a little more technical, because now you need a balance sheet
Yeah.
and an income statement, right? And when you're a sole proprietor, you are the business. right? The money that comes in and the money that you spend on your business, everything, even though you need to track, your income and expenses, everything kind of gets commingled and you are the business. When you're incorporated, you are not the corporation, right? So if you put money into the corporation, that corporation owes you money back. So it's a very different system. So I would say that getting a bookkeeper if you are incorporating is highly recommended. And then depending on how complex and how sophisticated your bookkeeper is, I mean, your bookkeeper can probably file HST for you. They may even be able to file your corporate tax return. But depending on the level of expertise that you require, you might then look for an accountant, like in public accounting, that can kind of answer questions. I mean, a lot of bookkeepers that I work with, I love them for this. They ask me questions throughout the year. They'll say, hey, we got this asset. How do I set it up properly? Or am I doing this right? Because there is a lot of technical behind accounting. And so we kind of act as like a sounding board for a lot of the bookkeepers that we work with. And then that's great because then at the end of the year, when we get, the stuff to compile the financial statements, everything's clean and we're not worrying about what did you do here? And they're like, oh, I didn't really know. So I just did it. I just did it how I thought I should. And so yeah, so that's what I would say about that.
Yeah, and it's funny because for Essentria, we do have a bookkeeper because we are incorporated. It's more complex, lots of things, ins and outs going on. So they deal with everything. But I remember last year for taxes, for my own small taxes, business taxes, it was like I want to make sure I'm always someone who I want to make sure it's easiest for whoever's doing the work. Like, what can I do to make your job easier is always what I'm trying to have as my goal. And I remember reaching out being like, hey, what can I do to make sure that I'm handing in what I need to for taxes to make it super clear for you guys as to this is what I'm actually meaning and you can do your job properly instead of taking twice the amount of time sifting through I know it's on a computer, but my chicken scratch writing almost of like, okay, this part here and that, right? Like I don't want anything to be confusing because then realistically it's me that's going to miss out on any tax deductions, anything like that. And so I always, again, that's something when I'm talking to any of our students or anyone who's just starting a business, of try to make it as clear as possible and ask those questions, because when it comes to taxes, you do want it easy and clear so that nothing gets missed. One, so that you get your full tax return, but also the CRA doesn't come back to you in the future being like, hey, where's this or where's that? And then you're like, oh, I didn't know I needed to submit these things, and that.
Yeah.
So absolutely. And you mentioned HST real quick. Can we hop over to HST and can you talk a little bit about when does someone need to start charging HST, and what does that all involve?
So HST is required when you have a taxable supply over $30,000. So if your small business really only generates, if it generates under 30,000 in annual revenue, you do not have a requirement for HST. Also, if you're an exempt service, you don't have a requirement for HST. So aromatherapy, probably if you're selling, supplies and things like that, you probably would if you're doing
Yeah.
well. But like example would be, like doctors don't charge HST on medical and stuff like that. But for the most part, most small businesses are subject to HST, and so 30,000 is your limit. Now, you can choose to register earlier if you want to, but most people don't. I think that most small business owners don't love HST. It
No.
does make things a little more complicated to track, because when you aren't charging HST, it's money in, money out. And, if I spend $150 on something, that's my expense. Well, when you're registered for HST, you actually have to separate the HST from your expense.
Sure do. Takes a
Yeah.
lot more steps.
So, and then how that works is if you buy something for $100 and it comes out to 113 with HST, your expense is actually 100 and your $13 is what's called an input tax credit. And so even though it's kind of a pain to track all of that, you actually get dollar for dollar back, right? So if you charge, say $100 of HST on an invoice, any HST that you pay on expenses is a direct reduction of what you've collected. And so those two numbers go, they subtract out, and whatever you're left with is either what you owe or what you're entitled to get back. Sometimes people get HST refunds, right?
Well, that's fun.
Yeah. So even though it's a bit of a pain, it's not the same. It's not the same as like a tax deduction. It really is dollar for dollar. So when you spend $13 on that $100, you essentially get that $13 back. Now, it might
Yeah.
just be reducing how much you owe because you've collected it from a client, but it is dollar for dollar.
Yeah, which I mean, hey, if it's reducing the overall, to me that's a win. All of that is always a win. Anytime you can reduce that percentage, and get, even if it isn't, like you said, come back directly to you, it still brings it down, and which is great. And it does take a little bit extra time. I had to start charging HST last year. It was the first time, and there was all kinds of new things that I learned about it, which was great. But once you get into it, it's not as bad. Like I was more afraid, I think, of the unknown. But now that I know, I'm like, okay, it's not as horrible, and you just get used to it more and more and more.
You
So
do.
don't be afraid of the HST, and it's a
And
good
for
problem to
anybody,
have.
yeah, and for anybody that uses Excel to track their expenses, so when you're looking at Excel, there's columns, right? And
Mhm.
typically, I think most people would put, say, supplies and maybe, advertising, and they have all their columns. The best thing to do is just pretend that one expense category is three columns. So you have
Mhm.
before HST, HST, and total. And
Yep,
when you
that's how
track
I
your
have it.
expenses, pop it into your Excel that way, and whoever's doing your taxes will love you because everything's broken out. And again, if you keep up with it monthly, it's not such a daunting task at the end of the year.
Right? That's the thing. I do have it separated into the three columns. That I always had the three columns before. It was just in my tax document, and I just always ignored the HST. And then now I have to use it. But so yeah, if as you said, if you stay on top of it every month, it really doesn't take that long. Don't be like me and wait until mid-April to start doing it for the deadline. Um, so when you were talking about though of, your columns deductions, that is a big thing we get asked from our students, and big discussions in my networking groups that come up all the time of what can be considered a deduction when it comes to taxes. I think some things are a lot of people recognize. And then it also depends on if you have a home business
Mhm.
versus brick and mortar or things like that also. Can
Yeah.
you share a little bit of light on that?
Yeah, so lots of different expense categories for sure. And yeah, I think the low-hanging fruit are things that are very obvious. So if you're buying supplies and reselling them, that's obviously a
Mhm.
business expense. If you're buying something for your office space, that's a business expense. Um, Two areas that I would like to touch on the most, where I actually think most people, there's the most gray, is home office and
Mhm.
auto. People love vehicle expenses. So home office, if you are working from home and your business is solely from home, then yeah. So the way CRA views it is it's square footage of your home. So if you have a
Mhm.
dedicated office that's say 10 by 10 and your home is 2,000 square feet, well, then it's 100 square feet over 2,000, and that's your percentage. And so what you would do is you would track all of your bills, everything, utilities, property tax, or if it's just rent, condo fees, mortgage interest, not mortgage principal, mortgage interest. Those can all be picked up, and then whatever pro rata of the space you use can be claimed. Now, typically most softwares, you don't have to do the conversion yourself because most softwares allow for that. So even if you just pick up the annual expenses, your accountant will be very happy with you. Um,
I was going to
Now,
say, is it better to, on your spreadsheet, let's say, is it better to just, hydro, I spent, let's make it easy and say $10,000 a year on hydro,
Mhm.
and 20% of my house is home office. And you have a line that says that. Is it just easier to hand that in and then accountant does all the magic, or does accountant prefer, would it be easier for like the small business owner to actually do those calculations?
I would say as long as we have the information,
Hmm.
meaning the size of like the square footage of the house and the square footage of the home of the office,
Yeah.
annual is great.
Okay.
Yeah.
Perfect.
Annual is great. You don't need to do the math. If you want to, I'm sure nobody would be mad at you, but yeah, I don't think you need to.
Okay.
And one note for anybody that lives in a condo, because I know that this comes up a lot, where it's, oh, well, 50% of my home is used for business because I work out of my kitchen, and my kitchen and living room and dining room are all attached, right?
Yeah.
So CRA's administrative standpoint on that is, you have to use the square footage of the table you are working at when you live in an open layout.
Interesting. I see. And we don't have an open concept house, and
Yeah.
my office is literally like there's doors everywhere, so it's very
Yeah.
easy for me to see exactly this is my space. Giving massages and
Yeah.
everything, need to have doors for
This.
privacy, but that's
They came up with this in
ooh,
COVID because so many people were working from home, and then you have especially people that live in Toronto. Like most
yes.
people's condos in Toronto's are like one room. Maybe they have a
Yeah,
bedroom, but for the most part, it's an open space.
it
And so people were
is.
trying to claim large portions, and so they came out with this administrative policy to say, okay, if you're working at your kitchen table, you can take the square footage of your table. You can't take the square footage of the
Oh.
room.
How many people are going out buying bigger tables?
I need a 14-foot harvest table.
Right? I just need it just so happens I need
That's
this
funny.
really big table all of a sudden.
Yeah.
That is really good to know though, because that's not something I'm sure most people realize.
Yeah. And so the rule of thumb for home office as well is either 50% of where you do your work. So, I mean,
Hmm.
obviously, if you only work from home, that's 100%,
Hmm.
or the space is used to meet clients.
Hmm.
So if you fall into those criteria, you can claim business use of home.
Awesome.
Now the trickier one is auto.
Hmm.
So I think that in my experience, most people I come across, I think they think that if they have their own business, yep, I can claim auto, no problem. It's a business expense. So again, the rule of thumb on that and CRA's administrative policy is that first and last trip of the day is personal.
Hmm.
So in the same
Okay.
way that I drive to my job, if I'm an employee, I don't get to write off my car,
Hmm.
right?
Yep.
So same goes for business owners. So if all you're doing, say you do have a location that you rent, if all you're doing is driving to your location, working in
Yeah.
that office, and then driving home, you actually do not have a claim for business use
Hmm.
of auto.
That makes
Now,
sense.
if you're going to the office and then you're going out and about and you're going to clients and you're picking up things for the business and you're doing all that kind of stuff, then yes, that would qualify as business use of auto.
Hmm.
And what I would highly, highly recommend for anybody that's in that situation is a mileage log.
Hmm.
So if CRA ever audits your vehicle expenses, the first thing they want is a mileage log, and that is very difficult to come up with if you do not stay on top of it.
Hmm.
There's lots of really great apps. I think there's like Mile IQ, and there's a bunch. It's hard to get used to because every time you get in your car, you kind of have to use it because you have to log it, whether it's personal or business. But if you prefer to do that over, writing everything down, then that's an option.
Now, what about, I'm just thinking like the odd time you need to use your car, like 3 times a year.
Mhm.
Could you just charge it as kilometers? So go onto the CRA website and say, I had to go to Toronto for a meeting, um, and, meet with clients and then drive back. And
Yeah,
you do that maybe twice a year. Could you then just kind of look at the CRA kilometers and put that in as like, okay, it was
yeah.
200
So that,
kilometers, 70 cents a kilometer type thing.
yeah, every year the CRA, so you're referring to the
Yeah.
prescribed auto amount.
Yeah.
Yeah, so the first 5,000 kilometers is worth, say, 60 cents, and then anything over 5,000 kilometers is worth, say, 55. Every year the rates are updated
Yeah.
for inflation. Yeah, I mean, to keep it simple, you could do something along those lines. It's going to be a very minimal amount anyway, right? Like if you're only driving a couple times and it's a couple hundred kilometers, it's going to
That's
be a claim for 50, $100. So yes, I would say as a sole proprietor, you could probably do something along those lines.
mhm,
That works very well when you're incorporated and the vehicle is still in your personal name.
mhm.
That's the
Okay.
best way to do it because you're
Okay.
essentially charging the company, right? So the same
For yeah.
way, yeah, you're treating yourself as an employee.
Yeah.
And you're essentially saying this is business related. Okay, so company, you're going to pay me for my mileage, and then the company can deduct that, and then you actually get to take that tax free because it's a reimbursement.
Mhm.
Yeah.
Okay, that makes
So yeah.
sense. And what about, just because we're talking about auto, what about like changing winter tires or oil changes or things like that? Does
Yeah.
that all go into it then?
Yeah. So if you're using your vehicle like frequently for business,
Hmm.
it would be so lease payments and or financing. So you're either if you're financing your capital, we call it capitalizing it because it's your vehicle. So you would
Yeah.
basically take like a portion of amortization on the vehicle, um, gas, maintenance, insurance, even like 407 bills, if the 407 is directly related to going to a client meeting.
Yeah.
Yeah, anything that relates to your car in that period can be tracked, and then a portion can be claimed based on your mileage.
Okay. Okay.
And it's the same thing for, like I said, for business use of home. You can just total everything. And then as long as we know, how
That's
many
the
you drove for
total.
business and what the total was, we can
Yeah.
do the math.
Okay. That works. Now going back to like the columns of deductions, I know a big one also is food, restaurants, meeting
Mm,
clients,
mhm.
having, people over to you're doing networking events or you're having I don't want to say a party, but a party of like just a gathering of clients or coworkers or things like that. How does the deduction when it comes to food, restaurants, that stuff works? I know sometimes it's 50%, but I feel like sometimes it's also 100%.
Yeah, it's for the most part, it's 50. If you're entertaining, it's 50%. And I think,
Okay.
the kind of mentality behind that is you're also paying for yourself.
Hmm.
So, if you're taking somebody out for lunch, it's kind of like you're getting the benefit of deducting what you're paying for them. And it's almost like
Yeah.
you're not getting the benefit of feeding yourself.
Yeah.
When you have large events, still, I would say as a rule of thumb, it's 50%. It can get it can get different. You can get different treatment when it's employee based, but I think that for the purposes of this little chat, I think it's more smaller business.
Yeah.
Probably
Yeah.
not a lot of people would have employees.
Yeah.
So I'd say as a general rule of thumb, assume 50%.
Okay.
Yeah.
Okay, good to know. See, I know like go to a lot of networking events and things like that, and that,
Yeah.
it's whoever's hosting it, how does that work and
So if you're
different things like
hosting
that.
an actual event where, say, you're bringing your clients, like everybody into like one room,
Hmm.
you might be able to claim that as advertising, but it depends what's going into it.
Okay.
You know what I mean? If you're just going out to a restaurant, I'd say 50%. If you're throwing an event,
Hmm.
yeah,
That's different.
it's
Okay.
it can be a little different. The other thing to note with meals, since we're talking about it, is HST.
Hmm.
If you have a good bookkeeper, hopefully they'll pick this up for you, but the portion of your meals that is not deductible for tax purposes also is not deductible for HST purposes. So only 50% of your meals can actually be picked up the HST.
So yeah, so you'd have to split the HST in
Yeah.
half
Yeah.
also then. Okay. Okay. Now, and this just made me think, I worked for the school board for years and it was always very much drilled whenever we had conferences. Alcohol does not count as a deductive. You choose to have a drink while you are out. You are paying for it. It was always very, very drilled into us for conferences. Drinks cannot be reimbursed. Now
That might have
can
been a policy. That might have just been their
Oh yeah, it was
policy.
totally a
Yeah.
policy. Let's look at school board
Well,
staff, and
it was cost and probably also legal liability.
oh, absolutely,
Yeah.
100%. And it just made me think of alcohol could be used if you're having, again, a gathering, things like that. Alcohol can
Yeah.
still be on the receipt, I am
Yes.
assuming.
Yes.
Okay. No, it's just,
Yes.
I think it's just been so drilled into me, and I don't really drink anymore. So I'm just like, well, I would assume alcohol can still be on that, though. Just something funny that came to my mind.
Mhm.
Now what about, because I remember asking, like, what are the actual columns? And I think it was you that answered me when I
Like
had
types of
emailed about
expenses?
that. Yeah. And it was like, you had just said, if you look on a past tax form, it'll actually say it. So when I got my return back, it says, like, I'll
Yeah.
just go with houses because it's all I can think of hydro and internet and phone. I don't even remember what they all are off the top of my
Yeah.
head, but they actually have a lot of the categories there.
Yeah. So if anyone's interested, I just pulled this up. I just Googled it quick.
Okay.
So the form for sole proprietor. So this is not anybody that's incorporated, but for a sole proprietor, the form is called a T2125. So a 2125. And all the expense categories are on page 3.
Yeah.
So it's advertising, meals and entertainment, bad debt, insurance, interest, licenses, office expenses, office stationery. There's a whole bunch, right? Like
Hmm.
professional fees, management fees. So there's a whole list. And then your business use of home expenses are actually on
Below that.
the lot. I think it's the last page. Nope, I'm lying. Where are they? They're on page 4. So yeah, below it on page 4, under part 7, calculating business use of home expenses. So it's heat, electricity, insurance, maintenance, mortgage, interest, property taxes, and other.
Nice. And if something, I remember I had a few things that just didn't seem to fit into a category. Is it possible just to kind of have like an other with an explanation of like,
Yeah.
this is what it is?
Yeah. I mean, yeah, you can't come up with everything as long as, it is actually business related,
Yeah.
then it's claimable.
Okay. Awesome.
Yeah.
So that it's I know it can be a complex discussion of like, and you can't get into detail about exactly every little thing because the amount of things could be, we could be here for hours being like, is this that?
Yeah.
But as long as it's related to business, you should be able to kind of fit it in most places. And then, because I think it's actually education. I think there was a spot that there wasn't a spot
Education.
for
Yeah.
education.
Yeah, so that would be like
Um,
professional development or
yeah.
education. The way I kind of like to explain it to people is if you were an employee and you didn't own the business, somebody else owned the business. If you paid for something, whatever it is, would the business pay you back?
Hmm. Yeah, it's a great way of
Right?
looking at it. Yeah.
And it's like, would you have to pay for your own professional development? Probably not,
No.
right? Because usually that's part of your compensation. And so right? And if you have to drive to a client outside of your normal driving schedule, would your
Yeah.
company reimburse you? Probably, right?
Yeah.
So yeah, anything that you are out of pocket that isn't personal.
Yeah. And I know I used to take that look on it and I actually forgot about that a little bit. It was always because I was so used to being in the school board of, you know, the school board used to pay for all of a sudden I have to pay for this. I'm like, what? And I'm like, oh wait, no, it becomes a business expense at this point.
Yeah.
Because I was so used to like the school board paid for these certain things. And I'm like, oh, but as a business, I now have to pay for this. But it does go then into that business expense. So it equals out in the end, which is really, really nice.
Hmm.
Um, any last thoughts or recommendations that you can share with our listeners? If there was maybe a couple takeaways that you would recommend.
Yeah, one thing that I see a lot with new business owners and new sole proprietors is kind of the sticker shock they get when they owe their tax.
Yes.
And one thing that is very important that I don't think a lot of people realize is that when you are a sole proprietor, you are responsible for your CPP and the employer portion of CPP. So for anyone that's been a T Ford employee, CPP comes off your paycheck, but behind the scenes, your employer is also matching that CPP. So, right now it's almost up to 8 grand, both those portions, right? Because each of them are almost $4,000. So if you're maxing out, you have to pay that as a sole proprietor. So for even people that have, say, lower income after all their expenses, I'll find that, they owe quite a bit of money on, say, 20 grand, just because it's primarily all CPP.
Hmm.
So it sucks, but I mean, at least know that you're at least paying into your retirement. It's not all just tax.
Yeah, that is nice to
Um,
know.
but the rule of thumb I tell people is 30%.
Okay.
So after expenses, expect to pay 30%.
Hmm.
And that holds true till 100,000-ish of taxable income. Because it's
Okay.
always it's always good to have that saved, especially when you have all your money coming in. You kind of think like, oh, look at all this money I get to spend, and then you file
Yeah.
your taxes, and you're like, oh no. And then
Because you're
this,
used to it. If you're in if you're in corporate world beforehand, it just
yeah,
naturally comes off before it goes
yeah,
into your bank account. Whereas now it doesn't come off. It goes all your money, like each time I see a client, 100% of it goes into the bank account.
yeah,
So then I have to, and that's one thing I do at the end of every month. I look at my income. I'm good at tracking my income, and I put in the HST portion away, and then I put in my tax portion away, that to owe, so that I don't get stuck with that, nice bill at the end of like, hey, and now you
yeah.
owe us $10,000 as an example,
eh,
um, right then and there.
Yeah. And the other really big one is installments.
Yes.
So, after your first year of operating as a sole proprietor, if you made money, you're going to have a tax balance. And when your tax balance is greater than $3,000, you have a requirement for installments. And the reason I bring this up is because most people don't realize this. And then what happens when you don't pay your installments is you get applied penalties and interest, which can be very expensive because right now I'm pretty sure the prescribed rate is 9%. So CRA is charging you 9% on the money that you're not paying them. So when
Hmm.
you're a sole proprietor, your installments are due March, June, September, December. So it's quarterly, and it's based off of what you owed in the previous year. So if your tax bill was $4,000 last year, then you are paying a $1,000 installment every quarter to basically prepay your tax. So
Yeah.
in year two, if you made the exact same amount of money, you wouldn't know anything because you've already prepaid that tax, and you would continue to pay your installments.
Hmm.
If you don't pay your installments, then you're going to have to pay even more because you're going to have
Hmm.
interest and penalties tacked on. So that's a
And
big
the
one.
thing
And it's the
it
same for
is,
HST. It's the same
yeah.
for HST. HST has quarterly installments, and that's just based off of what you owed in the previous year as well.
And I learned that the hard way on installments because the CRA doesn't tell you.
No.
And for the installments, you actually need the CRA paper that says this is installment 1, 2, 3, and 4, and it says the month on it. But you need to call them and ask for them to mail that to you. They won't just mail it to
If
you
you
on
want to
their
go to the
own.
bank, if you want to go to the
So
bank,
yeah, and I
yeah.
do everything in bank for that. I do I don't they won't my bank won't allow me to do it over internet banking. I did it and it went into someone else's account actually. I had a huge chunk of money disappear, poof,
Oh
from the
no.
CRA that they then had to track down because it went and paid someone else's personal taxes apparently. Fun times. And but it was in because I saw on my account saying, this wasn't paid. And I said, I did pay that. And that's when we
Yeah.
found out. And that's when they were like, oh, and by the way, do you know you owe your installments? And I said, I don't know what you're talking about. And then they explained it all to me. And I said, well, this is the first I hear of it. And they were nice and said, if you do miss an installment, as long as you pay by the next installment, then they actually waive the penalty.
Okay. That's good.
So that was really awesome to know because I was past the date because I had no idea it was a thing.
Hmm.
So that is something I now strongly recommend, feel free to call the CRA being like, even, am I missing something? Do I owe anything? We never want to ask if we owe, but realistically, it's better to know versus get hit with a penalty and all of a sudden you owe thousands of dollars more in interest for no reason. Um, so I
Yeah.
always now take the preventative approach of like, hey, am I missing anything? Do I owe you any money somewhere? Please let me know because I don't want to pay more than I need to.
Right. Yeah, 100%.
Because yeah, that was the installment was a big shocker for me. Absolutely. So, and they don't make it easy, but that's okay. Once you know, it works, and it's easy once you get into the routine of it. And so, well, thank you so much for coming on today's podcast. I know, as we said, it's not always easy. It can be a little complicated, but it is super super important, and it's something that you love, which is great, and something that I'm learning to love every year more and more. And I do appreciate it because I see where taxes go, and I try and always take a positive spin on things of, it's helping. You say I love the fact that I learned about the CPP because now I don't feel as bad actually paying my taxes in that aspect. So I'm always trying to find those positive of my money is going out, but it's also coming back tenfold every time I do have to pay HST and taxes and things like that, and putting a nice fun spin on it.
Mhm.
So thank you so much. If people want to get in touch with you, how can they find you?
Um, they can reach me via email. It's
Great.
kburch, so KBURCH at batemanmackay.com.
Awesome. And do you work with only people within Ontario? Can you work Canada-wide? Like, what is the population of people that you can
For
work with?
for personal tax, I mean, I can work Canada-wide. I mean, technically, I can also work Canada-wide corporate. It's just really if people want an in-person connection or not.
Hmm.
But I do have multiple clients that I've never met in person before.
Yeah.
Yeah.
Awesome. Awesome. So yeah, if you do have any questions about taxes, if you want to do your taxes, she is great. She has done our taxes for years, and we have always had amazing outcomes with it. So thank you.
Yeah. Thanks for having
uh,
me.
yeah, and thank you everyone for tuning in to this week's episode of Vetiver Vibes. Bye everyone.
Thank you for spending your time with us here at Vetiver Vibes. This episode was brought to you by Essentria, a leading online aromatherapy school. Don't forget to check out some of our free resources at www.schoolofessentria.com.
If you love this episode or you got a lot of value out of it, please make sure you share it with someone in your community who you think would enjoy it too. If you haven't already subscribed or reviewed the show yet, you can go on over to your preferred streaming platform and hit subscribe, then leave a review. This is the best way to help support us, and we appreciate it. Email us with a screenshot of your review, and we will send you a free guided meditation as our way to say thank you.
This podcast is for information purposes only. We are certified clinical aromatherapists and holistic health professionals. If you have a medication concern, please refer to your health team. Everyone's health is unique to themselves, so the topics and suggestions stated may or may not apply directly to you.